Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo, not the video for the 10th of January here in the new year of 2023. Let's get started with a quick update, because the big news and the market mover outside all the Fed heads doing their speeches and their announcements, which Chair Powell did not do a lot in terms of updates for their forecast. That was yesterday's session, but we still have some Fed speak, a little bit of earnings on deck. And we're getting ready for two major things in the market, at least from my perspective. First is going to be looking at our calendar. What did the market watch? Do the calendar. We'll have the CPI data. CPI data is going to come out on Thursday, January 12. Quick note before we go any further. Within that logic, this is your S&P futures. So in terms of where the implied volatility is, it is right here. There is a big jump in implied volatility from Wednesday's session into Thursday's. And that is again on the CPI, just to name a few. So that's going to push the implied volatility 13%, 29%. We'll be watching this. This is again Tuesday night here as we did the video. So preparing for this coming forward in the NASDAQ, that'll translate, by the way, to an 80 point or 80 handle expected move. In the NASDAQ, we'll see its implied volatility jump, double actually, from 18% on the Wednesday into Thursday, 38% for its implied volatility, or a plus or a minus roughly 300-point move in the NASDAQ. That's the first thing to note as we get started. Second is we're going to have some major earnings take place in financials. That's the other theme. We have CPI. That's coming up. But after the CPI, 3 days forward, we're going to have, or same day really of the CPI, financial earnings. So financial earnings, CPI and FIN, will be the title and the theme of tonight's video. But that's getting us prepared for the next few trading sessions. So what's going on here? What's our logic? When do these stocks report earnings? Just going through the list, BlackRock and other financial earnings will be reported on the 13th earnings call, and that'll take place pre-market. Bank of America, that'll take place, or Bank of New York Mellon, Wells Fargo, just going through naming a few of these, Citigroup, JP Morgan, Bank of America, United Healthcare will take place. That is as well on the 13th. Where are we looking at on that? That's your Friday session. So beyond that is a couple of them, Goldman Sachs and then Morgan Stanley. Those will actually take place the following week. So that will be on a Monday. That'll be the 17th. Morgan Stanley and Goldman Sachs. So again, CPI coming up and earnings from key financial names. And taking a look at some of those, you see its implied volatility, they pick up as well. But we'll look at this from their perspective of some of the main ones. Wells Fargo, 72% implied volatility. Citigroup, 66. JP Morgan and the others, 50. So that will be something to be watching in our trades going forward. So within that context, where are the markets currently? In the new year, at least so far, where is the performance of the market? Today ended up at the high, but looking at where we closed at the end of the year to right now, the market's up about 2%. S&P at least. On the NASDAQ, it's up. Again, looking at from the close, roughly speaking there, about 2%. One quick question I have that I want to scan and use some scans for. This to me is done with the Market Watch tab and the quotes. So I'm using rate of change, but there are many, many other ways to look at this. I just want to know which stocks are outperforming the market, given that the S&P is up 2%. Which stocks are leading the pack? And are there similarities in them? Stocks that are leading the pack, and what I'm showing here is just the percentage from, in this indicator, just the rate of change, roughly speaking, 7 days ago. Why 7? Because that'll take us to the end of the closing of the last year. This will get as close as possible to showing what the performances are so far in the year. Again, Tuesday the 10th. GE up 15%. Let me show you what that looks like as we look at this list. So GE, one of the main gaining stocks in today's session, And that is straight up. So what we're comparing is the closing price at the end of the year to where we are right now. Again, that's about 15 or some odd percent. And that's what the indicator, the tool rate of change 7 days ago shows. Behind that, the number 2 stock in the market, at least in terms of performance, that is Netflix. So one of the similarities, there's Netflix as well. Its performance being from the close up to the present, that's about 11% or 12, similar to what we're showing here. Going down the list, we'll see Intel. Let me jump this off the chart, just look at where we are. Are there similarities in Intel, Dow Chemical, Ford Motor Company? That was actually a support buy. And beneath that is CRM, Salesforce.com, Booking, the Facebook, formerly known as Facebook, currently known as Meta, and Charter, PayPal, and some of the others. One of the commonalities in these stocks is that they are, or were, some of the weakest stocks in 2023. PayPal included in that list, as is Netflix and some of the others. But these are getting a big bounce just in the first week or so of the new year. So that is that quintessential relief rally, with the equity market being up about 2%. Now that being said, that's the list of gaining stocks, or stocks that are outperforming the S&P. Which ones are underperforming it? We flipped the list upside down. So which stocks are underperforming the market? So looking at these, UNH would be a stock that has fallen almost every day of the new year. Behind it is Pfizer, another stock fallen almost every day this year. Lockheed Martin. Microsoft. Microsoft has had news in today's session, but it's down in the percent function, roughly 5%. So not much more we can gain from those, but just seeing if there are commonalities in those stocks. So that's things that are floating to the top, and the way I see that is relative strength, or things floating beneath the market or underperforming the market, that's relative weakness. These will be stocks to keep a name in as we go forward in this week and beyond. But outside of that, we're looking again CPI and financials. The financial index, or the XLF, its performance, roughly speaking, is up about 3.7% in the first few days, first week, and a little bit beyond at the holiday weeks, the new year of 2023. So what other sectors are in focus? Not a lot. In today's session, again Tuesday, discretionary was strong, materials was strong, and healthcare was strong. Maybe too early to call any major insights or trends from these performances, but we'll be watching these underperforming and overperforming of that current 2% of the market, looking at the SPX or SPY or the ES futures. Quick perspective outside equities into crude. For the year, crude has had a pullback, and from that close is down about 6%. The bulk of the selling was on the first and second trading day of the year, those sending down trend days and weakness in the crude market, and currently it's down about 6% to start the year. Gold is getting a bounce and getting a sustained bounce. Gold's up about 3%, right in line with those financials XLF. And then we look at the bond market. And the bond market, TLT, its performance this year has been strong. Just about every day, except for today's session, has been an up day in the bond market, shown here by TLT, or TN. TLT is in terms of our 30-year or 20-year to 30-year ETF. Look at IEF, that would be similar performance. That's a little more short-dated. That's the 7 to 10-year Treasury note. And roughly speaking, it's up about 2.5%. Those are markets that I like to cover and make reference each day and frame the broader picture. And we see that often in the overnight, or at least the cross market. That's your S&P. In terms of its recent trend, has been volatile, has turned range. Lengthy trading range has broken to the upside. Similarly, in gold, we've had a trading range also break to the upside. Bond market, seen here by ZN, followed the equity market down. So the bond market followed the equity market down, it broke out bullishly a little bit ahead of the S&P. So the bond market had its consolidation, but it had bullish breakouts early in this year when the equity market was holding a little bit behind. So the bond market has been strong. Crude oil, CL, has been in its volatile sell-off. It's detached or decoupled from the other markets. So things we're watching is the money flow going across the equities, bonds. That's an easy connection. Not so easy in gold, oil, or other commodities. But as we get ready for this week, Wednesday could be a flat or at least a consolidated session as we prepare once again for our CPI. And after the CPI, and by the way, this is how to get the numbers on that, the expectations. CPI is going to be your change in the average price level. That's your inflationary data. That's previously been big market moves on CPI data. Expectation, a little bit of a cool off. Looking at that 6.6, that'll be the level to watch going into Thursday session. We'll talk more about that in TheoTrade through Wednesday session as well. But after that will be financials. So as always, be careful and safe. Lots going on, lots of trades and lots of opportunities. But of course, risk is there as well. This is Corey Rosen with tonight's Theo video update for January 10th, 2023.